Welcome back to QAV. This is 616. We're recording this on the 18th of April, 2023 Australia time, which makes it the evening of the 17th of April, 2023 in Savannah, Georgia, where my wife's mother-in-law is from, I believe. Chrissy always keeps telling me, I have to take you to Savannah. You'd love Savannah. And it's where Tony Kynaston is at the moment. TK, how you doing? How's your trip going?
Good. Yeah, I love Savannah too. It's a student town. The SCAD, the South Carolina Arts and Design School is here.
Hmm.
So it's good, yeah. And it's
And
got lots of architecture in it.
does everybody talk like this?
Lots of Southern charm. You all have a good day.
I've always relied on the kindness of strangers.
We've been going around doing this. Every time someone talks, we go, mm-hmm, mm-hmm, after every sentence.
Oh, I love it already.
You'll have a good day. Mm-hmm, mm-hmm.
Now, since it's been a couple of weeks since we've done a show, since then, I think, because I think you were in Vegas last time, you went
Yeah.
to watch the Masters.
Augusta, Georgia. Yeah.
Who
Good
won
old.
the Masters?
I'll have to think now. Who won the Masters? Shit, that's been a couple of weeks ago.
Wasn't
I
Magnus
forgot.
Carlsen then?
No, hang on. I should know this. I was there. Oh, John Rahm, of course. John Rahm. He
Not an
walked it.
Aussie?
No, Spanish.
Oh,
He
okay.
was the spirit of Sevi Ballesteros. Who would have turned 66 on the Sunday. It was his birthday, but he died of brain cancer about 4 years ago, unfortunately.
Well, he was a golfer.
Sevi Ballesteros was my favourite golfer growing up. He was a very gifted Spanish golfer, just intuitive golfer, could hit a ball from anywhere, out of a tree. Won a big tournament by hitting it in from the car park one day.
Hold on a second. He was 66. He would have been 66. You just turned 60.
Mm.
When you said you were growing up.
Well, yeah, I mean, in my teens, he would have been just starting out when I was probably about 14, 15 or so. I didn't play golf until I was 20, so he would have, sort of started taking an interest in, around that sort of age, and he was established as a pro then.
Right. I think you're already growing up by the time you're 20.
Okay.
I was thinking you're like a 5, and I was like, oh, he was like 11?
Well, when you turn 60 and you say when you're young, that can be any time up to 30, I think, probably, maybe 40.
Right. Okay.
Yeah.
So was it good?
I mean, yeah.
Was it your first time being there?
No, second time.
Watching a Masters?
And funnily enough, I saw a Spanish guy win that in 2017 too, Sergio Garcia.
Right.
Won in 17. So next time I go to the Masters, I'll back the Spanish golfer.
Yeah, although the Spanish golfers will be checking to see if you're there.
Yeah,
it's obviously you're the good luck charm.
Yeah. So I mean, Augusta's an amazing place. It just lives and dies for the golf tournament. It's brings so much money in, and there's not much else there. It's a pretty poor area overall, really, and it's a bit of a rust belt. We were shipped around in buses the whole time, and a couple of times we took some back roads, and there were just all these boarded up textile mills we drove through one day, just literally
owned by Berkshire Hathaway.
Well, that's what I thought of, but they weren't. But they were just left. Basically, they were just people had thrown rocks through the windows, and it's almost like someone just turned the lights off and left one day and left them standing.
Yeah.
So pretty poor, and lots of. Well, actually, speaking of Berkshire Hathaway, one of their businesses is demountable homes, and there's lots of those prefabricated homes around the South in America, where the truck parked in the front yard's worth more than the house that they live in.
And then what are you doing in Savannah?
Yeah, so we're making our way down to New Orleans. We had a week in Hilton Head because I love it there, which is only 3 hours away from Augusta. So Ruddy and another mate of mine, Jeff, drove down there, and we're joined up by a US buddy and his mate they came across from Nashville. and we played golf. And a friend of mine owns a 6-bedroom house in Hilton Head, so it's always good to stay there. So he pitched tent there for a week and went to the PGA again yesterday there, which was much more relaxed than the Masters, even though all the John Rahm was playing there too. So much more accessible and up close. But that was good. Played golf a couple of days, which was lovely. There's like 50 golf courses on Hilton Head Island. So it wasn't hard to get a good round in there, and lots of good food, lots of good seafood. Yeah, so just been quite busy. I'm getting quite weary because we've just been playing golf and walking courses, and then we even hired some bikes and went for a ride along around Hilton Head along the beach, and that was a good workout. And yeah, it's been good, been good. And then
Ruddy.
down to Savannah. Savannah's where basically the international airport is for Hilton Head, so that's about an hour away from Hilton Head Island. And Jeff flew out today. He's going back to Australia. So it's Roddy and I for a week. And then on Sunday, I fly from New Orleans up to Toronto, where Jenny and Alex will join up. And we'll
Oh,
spend the
they're meeting
weekend.
you in Toronto. I didn't know that.
Yeah.
Oh,
Yeah.
fantastic.
Next week. Yeah. So I think Alex has to tell you she may not be able to do a download the next 2 weeks.
I'll have
Good thing you're in
to.
Brisbane holding the fort for us.
I'll have to review her contract. How's Ruddy? He got over his COVID?
Yeah, yeah, he's good.
You didn't get it?
I didn't get it, no. But although I've been sniffling for a week or so now, everyone's got sniffles and coughs and things, and you get on a bus with 40 other guys, and everyone's sniffling and coughing and stuff. So, but no, I haven't got it. I've been healthy, been good.
That's good. Well, it sounds like you're having a fun time. I'm really.
I am. It's great. Really enjoying it, and lots of different things too, which is good. Vegas, and then we stayed in a place called Aiken, which is half an hour away from Augusta, and that was different. That's real American suburbia. We had.
And where did you stay in Vegas?
We started off in the Aria, which was a really nice hotel, and then went to the Mandalay Bay, which was more of a sort of family sort of hotel, huge place, which was good. That was fine too. Right. Went and saw Penn and Teller, which was fantastic.
Yeah.
And the Beatles Love, the Cirque du Soleil Love, which was great.
Which we saw, when were we there together? 2017?
Yeah, I think so.
2017 we saw that. Yeah.
Yeah. And it was changed. I mean, it's essentially the same show, but it's changed enough to keep it interesting. That was good. Yeah, Vegas was good. Lots of the golf courses around Vegas were very diverse and spectacular. So we had a couple of rounds in Vegas and around Vegas. One day it snowed. It was that cold. We got snow on the course. And then went out into the desert, went out to a place near Death Valley and played there. And so it was like, yeah, it's this sort of artificial oasis on some days where it's surrounded by rock and cactus and just the fairways are green. And then other days you're playing through canyons out in the desert. It was spectacular. Very, very varied. It was lovely. So Vegas, I could recommend the golf courses around Vegas. And then Augusta, we actually had some really spectacular golf in Augusta too. We played on Augusta Country Club, which is next door to Augusta National. So one of the holes shares Rays Creek. If you're a golfer, you'll know Rays Creek. It's part of Amen Corner at the Masters. So we were on the other side of the fence to Amen Corner. And you could hear the crowd roar, and it was pretty special. Similar sort of golf course.
In your head, they were roaring for you when you.
Yeah, go home. So that was special. And then we played a place called Champions Retreat, which is where apparently all the golfers go for holiday houses and things around the area, and played there. That was really good. Yeah, so some good golf. We played 3 rounds of golf in Augusta, lovely golf courses, and then down to Hilton Head, and that's been lovely. And now Roddy and I are going down to Jacksonville. We're just going to wing it between Savannah and New Orleans, see what's at Jacksonville. And then we've been told to go to the Redneck Riviera, the Pensacola in Alabama on the way through. So we'll do that for a night too. See what that's like.
And then you go to New Orleans, which is one of my favorite places in the US.
Is it really?
Oh yeah, I've been there many times. Never been with Chrissy. We always talk about going, but back in my Microsoft days, we used to have our annual conferences in New Orleans because it had this big sort of conference center that you could fit 40,000 Microsoft employees in, and got to party there, many times. It's a great city to just. I remember just walking down in the French district and just going into these little bars the size of, your bedroom, and just seeing 3 or 4 blues guys that all look like they're in their 90s, these black guys just sitting in this little bar playing the blues like they look like they've been doing for 85 years. And it was just magical. Yeah. They're probably all gone now, but and after Hurricane Katrina and all that, I don't know what happened to all those guys, but this is back before those days in the 2000s.
Yeah.
It was wonderful, really wonderful experience. And jumping in, and seeing the jazz bands there and the blues bands, just, really great.
Yeah, looking forward to that. Yeah. So I'll spend a couple of nights there with Ruddy and get into that.
Make sure you get down to Treme. Get down to the Treme district where all the music is.
Oh, okay. Okay. That's the HBO series, wasn't it? Treme.
Yeah, that's what it was set in. It was set in the Treme district. So you've got Bourbon Street where all the tourists go, in the French district, which is great. I love that. But you get to Treme, which is where the real music is.
Oh, okay.
Yeah, your skin color might set you apart, but just
yeah, we've had a lot of warnings about walking around after dark in New Orleans.
Yeah, you're rich. You'll be fine.
Yeah, well,
rich white people they get along fine. You'll be right.
I'll give them Ruddy. I'll sacrifice Ruddy.
Just make sure you have better running shoes on than Ruddy. People might be wondering, why am I listening to this? I thought this was an investing show. Well, this is what you get to do if you're a successful investor: is just take 6 weeks off and go play golf.
Yeah, no, exactly. I think I've played about 12 rounds of golf in the last 2 weeks. It's been full on.
That's great. I'm really happy for you. Well deserved. Well, we should talk about investing at some point. How's
the market going back there? I haven't really kept in touch with it.
It's had a great couple of weeks. You should go away more often. I keep saying that. Whenever you go away, we have a great time. Yeah, the market has had a great couple of weeks. Obviously, just opened 20 minutes ago. So the Fin said it was going to take a bit of a hit today, but in the last couple of weeks, it's just been going gangbusters. Let's start with maybe a portfolio update. The dummy portfolio since inception, which for new listeners is 2nd of September 2019, when we fully invested our original $20,000 in capital in the dummy portfolio. It's up 18.09% per annum over that period, which is pretty much right where it should be.
Yeah, that's right.
Versus the benchmark, which is the SPDR 200, the codename STW, which is up 7.67% per annum over the same period. So, yeah, kind of doing 2.5 times the index, which is nice. For the financial year, which is a couple of months away from closing, dummy portfolio is up 11%, 11.03 per annum. Actually, no, 13.94 per annum. I don't know. Navexa gives me two numbers, one on the chart, one on the result. The result says 13.94% per annum. Versus the STW up 17.76 per annum for the financial year. So again, we're not doing as well as the benchmark this financial year. It was a tricky one for us, but we're not that far behind, and we've been catching up quite a lot in the last couple of months. and up 14% for the financial year, which still has a few months to go. Not a bad result at all.
Yeah.
I'm quite happy with that.
Yeah, good. I am too. And it doesn't worry me that we're underperforming the benchmark in the short term. As you say, in the long term, it's that's the game to watch. That's the
Yeah.
game to.
With the buy list this week, one of the things to note is that copper is a buy again, which is normally exciting. However, one of our favorite copper stocks that we've done very well out of in the past, C6C, Copper Mountain, has announced it's being acquired pending regulatory approval, et cetera, by a company called Hudbay. So no, I mean, people who own it, congratulations. We don't, because copper, I guess it was a sell at some point. But it had a big spike in the last couple of days with that announcement. C16, I think we got a question about what to do if you are an owner of that later on. We'll get to that in the Q&A section. What else? Max put me onto an Aussie guy called The Chartist on Twitter. You ever heard of The Chartist, Tony?
No, I haven't.
He apparently just uses charting and has a 20% average CAGR as well. Max suggested we invite him onto the show for a chat. I'll get around to that at some point. But I started following him on Twitter, and he's got this great quote I saw from Phil Jackson, the coach of the Chicago Bulls. Wasn't he the Chicago Bulls guy, Phil Jackson?
I don't know. Sounds familiar, but I'm not sure.
I think that's who he was. Wasn't he Phil Jackson, okay. Chicago Bulls? Yes, Chicago Bulls during their sort of good years. Quote from him that I really liked, which was, "The most we can hope for is to create the best possible conditions for success, then let go of the outcome." And I thought, yeah, that's sort of a good definition of QAV. We just create the best possible conditions and then let it play out. Don't
have
think
a
too much
framework.
about it. Yeah.
Have a good framework, exactly.
Yeah.
Yeah.
What else? Oh, Buffett. Buffett gave another great long interview with his favorite journalist at CNBC. CNBC? I think so. Becky. He was on Becky's Squawk Box show talking about bank executives. I've got clips from the show that I could play, but basically he was talking about the recent bank collapses over in the US and was reflecting in large part what you've been saying, that it's not the same really as it was back in 2008. The investors are okay. Some of the investors in banks are going to take a hit. But he's talking about how the FDIC is going to cover the investors and
the depositors.
Sorry, the depositors. Yeah.
Yeah. Yeah.
And that it's not costing the government anything. And so people don't understand that and shouldn't worry. There was this quote, though. He said, "All kinds of trouble was caused by the banks, but bank executives all continue to live fine. They may have lost their job, but they got their pensions. There have got to be consequences for the people who make the decisions. Penalizing the shareholders later on by billions of dollars worth of fines, that doesn't deter the bad action." He said that some of these CEOs should go back to living like a person that works on the production line of Ford or something like that. They don't deserve anything special. But she asked him in the interview whether or not he saw it coming. And he said, yeah, he goes, I read the financial statements of all of these banks. Obviously, Berkshire have had investments in a lot of banks and they sold out a lot of them, I think, not that long ago. He said, but he could see all these losses going on in the bank's financials. And he said something like, if Berkshire lost $28 billion or something in a year, we would probably talk a lot about it in our earnings call. He said, but they were just, barely mentioning it. It was just sort of being blown off in these earnings calls. He said it's kind of this crazy stuff that they're doing and crazy thinking. So anyway, anyone's interested in Buffett's thoughts on what's going on with the US economy and the banks, check that out. You can see clips of it on YouTube. He's
I
always
did
interesting.
I did see last Monday, I think it was, he did a 3-hour interview on Bloomberg from Japan.
Right,
I didn't see it, but I saw it advertised. Apparently, he's bullish on Japan. He's been buying up a lot of Japanese companies recently.
right.
Hmm.
Good stuff. Well, he's always fun to listen to. Doesn't pull his punches. Pulls them a little bit more than Charlie does, but still.
Well, he's dead right about the banks, though, or any company really, and the CEOs get off scot-free. It's just complete moral hazard, especially with this latest round of bank collapses in the States. The government's just come in and swept up everything, paid the depositors out, shareholders get burnt, but the CEOs walk away.
Yeah.
That's
Yeah,
right.
it does seem wrong, doesn't it?
Hmm.
But that's American capitalism for you.
Yeah, and Roddy and I were talking about it tonight at dinner. It is different over here. Like it's much more entrepreneurial, but then the market's so big, you can have a lot of success with even a moderate or a small company. Really, there's just so many people here who need servicing. It's different to Australia, I think, where your market's much more limited.
Yeah. Well, that's all I've got to talk about. You got any news you want to get into?
No, not at all. Like I said, I've been turned off from the markets for a couple of weeks now. I'm playing golf. It's been lovely.
Good. But you do
Yeah.
have a pulled pork to do, I believe.
Yeah, I do a pulled pork. Someone asked the question for a pulled pork on mineral resources, which I'll do.
Okay.
So, okay, I'll do that one now. Uh, it's not a company I follow. I mean, I've certainly watched it over the years because it's been an exciting growth stock in the mining sector, but it's not on our buy list. I'll say that from the outset. It started off basically as a service company to the mining industry. It was crushing rock, and they still do a lot of rock crushing, basically. I guess that's part of the process, I think, particularly with iron ore, to get things ready to be exported and to extract some of the ore from the rest of the rock that they mine. But it's the company now, Mineral Resources, has expanded into other areas. It's now an iron ore miner of its own, and it's now getting into lithium mining and has some joint venture in that space, and also gas exploration. And they're currently trying to take over a company called Norwest Energy, which has a presence in the gas space. So from what started off as a relatively small mining service company, it's grown fast over the last, I don't know, 15, 20 years, I guess, that I've been aware of it. And it has an owner-founder by the name of Chris Ellison, and he's certainly very entrepreneurial and dynamic and has been driving growth in the company. And it's growing fast. I mean, revenue in the last 12 months is up 74% year on year. So certainly has a high growth profile. But that's one of the reasons why it's not on our buy list. Right off the bat, the prop cap for this company is 22 times cash flow. So, we're looking for companies less than 7 times cash flow. So you're certainly paying for the growth that you're getting in this case. So to run through the numbers, it's a large stock. So ADT is $68 million. I'm doing analysis on the share price of $79.13. I think it's a little bit higher than that now. This is a day or two old. But $79 is still less than the consensus target, but it's well above our IV1 and slightly above IV2. It does pay a dividend, but the yield's 2.78%, so we're not going to score it for that. Stock Doctor Financial Health is strong and steady, so it gets marks for that. And certainly it's a well-managed company. Net equity per share, however, is $18.25. So share price being up around $80, it's well above its book value and book value plus 30. So from a valuation side of things, we're never going to look at this. This is a growth company, and people are paying for that. Forecast earnings per share growth is 76%. So even though it's grown by that kind of number in the last 12 months, it's forecast to keep growing by that kind of number. So, it's doubling every 2 years based on its current trajectory. So it's certainly growing. Growth over PE, we score 2 for. It's 3.73, and our hurdle is 1.5. So even though it's growing fast, even though it has a high PE, the growth is certainly still, I guess, making it attractive on that metric. And the PE is 20.6 times, so it's quite high. And it's not the lowest in the last 3 years, so we can't even score it for being the lowest PE for the last 6 halves. Equity has been increasing, but not consistently, so we give it a 0. There was a period when it did fall backwards, and that's not surprising for a company like this. They are taking on debt to fund their growth, not just from cash flow, although a lot's funded from cash flow. So all in all, the quality score for this one is 64%, but the QAV score is only 0.03. And it scores low for us based on the valuation side, I think. And this is a classic growth stock. I mean, it's got the same sort of, profile in terms of its price as an internet stock does, or Afterpay did last year. So it's priced to perfection, and that's the issue I have with a company like this. And I think it's being caught up in the lithium mining boom as well, which is certainly it's about a quarter of its business now, and it's certainly one of the areas which has sparked interest with people. Again, whether that continues on or not is I don't know, but you're paying as if it will continue to grow based on a 20 times price or PE and 22 times cash flow that you're paying for it at the moment. It'll take you a long time to get your money back, especially if that growth profile slips. And that's one of the issues I have with buying these growth stocks. They're great when everything works, but it doesn't take much to knock a company off a growth path. If interest rates keep rising, or suddenly hydrogen-powered cars become more popular than electric-powered cars, and lithium might not be as valuable. All those kinds of things get thrown at curveballs when they're priced to perfection. So that's one of the issues that I have with these kinds of growth stocks. But certainly in the last 12 months and projected for the next 12 months, it's going to double in size. So good luck to them.
Thanks for that. One of the things that I plan on using AI to do in the next couple of months is try and figure out a QAV style model for growth stocks.
Yeah, right.
See if it can come up with something that checks all of our boxes.
Yeah, well, I hope so, because the companies themselves are attractive when they're growing. The problem is the price you have to pay for them.
Yeah.
Just you're buying future earnings a long way down the track, and if they don't get there, the share prices come tumbling down, and you've done your dough.
Yeah. We've talked a lot over the years about figuring out a valuation model that makes sense to you for these sorts of stocks, and you've had a couple of attempts at trying to figure out how do you get in, and then when do you get out, and how, what kind of rules do you set around it. And we've never heard anything that made sense on the surface, but maybe AI can work it out for us.
Yeah, but for me, it makes sense on the way up. Like you always get drawn to it because it takes, these growth stocks can do really, really well for 2, 3, up to 5 years, but it's the crash when they go up the stairs and down the elevator, and it's that last crash which can destroy a lot of value.
Yeah, and it's knowing when to get out. What are the metrics for when to get out? Because like everything else, they don't go in a straight line up. They go up, they go down, they go up again, they go down again, they go up again. Yeah. All right, thanks, TK. That was a question from Neil, asked for the min pulled pork. So hope you enjoyed that, Neil. Next question's from John. Wondering if TK could do a pull pork on the next new buy that comes into the buy list with an ADT over 100K. The higher up the list, the better. Well, according to our buy list for this week, that would be the NAB, Tony.
Is that right?
Yeah.
Okay, I can do a pulled pork on NAB for sure. Yeah.
It's not very high. Like it's come in sort of around 34, obviously as a big ADT, around what is it? 131 million, 131 million, I think. The next one is STO, Santos, back on the buy list. But crude oil is a sell. So, yeah, I think.
Yeah.
No, crude oil's a buy. LNG's a sell. And according to my chart, Santos is more LNG than crude oil.
It
Sound right
is,
to
yeah.
you? Yeah.
It does, definitely, yeah.
Right. So it's not really a buy for us at the moment. So maybe NAB is one to look at next week.
Yeah, I think the banks are interesting at the moment. They should be, and they are making money while interest rates are rising because they're passing on the deposit rate rises slower than they're passing on the mortgage rate rises. But I think there's a lot of sentiment out there against them because there's still this theory that we might go into a recession in the future and that'll hurt the banks. So, yeah.
That's certainly it's getting a lot of media attention over here at the moment. I think front page of the Fin today, or at least online, some economist saying the RBA doesn't know what they're doing and we're going into a recession and et cetera, et cetera, et cetera.
But there on rates, I noticed. I think the RBA met just after I left and decided not to increase interest rates for at least another month.
Yeah.
Yeah. So he's probably playing for his job now. So might finally be heeding the calls to not raise rates so quickly.
Yeah. Well, we'll see what happens. All right. Next question's from Sue. She says, I have my very first share position being bought out with the news about copper mining purchase offer of Hudbay Materials. I'm wondering where these situations sit with QAV, subject to approval, which reads very, very likely. I understand that I get 38.1 or 0.0381, sorry, of a Hudbay share per copper share. I can't see Hudbay on the Australian exchange, so I'm assuming we get NYSE shares. Tony has mentioned he prefers to stick with Oz shares. Would Tony ever entertain keeping international shares when they buy out an Australian company? If so, would Tony base this decision on its QAV score? I think we have talked about these sorts of scenarios in the past, but I can't remember exactly what you said. Would you mind going over it again for us, how you would
Yeah,
play
sure.
this?
So I think we had another mining company, a gold mining company that was, I think, SR Mining took it over from memory. Anyway, in this particular case, no, I'd be selling it on market now that the bid's happening. I don't think another bidder will come out to try and buy Copper Mountain because this is a scheme of arrangement, which basically means the board's agreed to merge the companies and they go before a judge and get their approval. I think it still needs a shareholder vote, and then it goes for the regulatory approvals as well of the country involved. I don't know the situation intimately, but it is an overseas company with a name like Hudbay. I'd say it's a Canadian miner, and I think C6C had its mine in Canada. Hudbay would be short for Hudson Bay, which is the big bay and to the north in the middle of Canada. Where it all began with the fur trappers and all the rest of it. Big part of Canadian history. Anyway, and no, I wouldn't want to hold an overseas stock necessarily. Apart from the fact that you'll have currency issues with the share price movements over there when it does come time to buy or sell, you'll need to take that into account. Dividends will also have that sort of extra complexity to them, I guess, but potentially there are taxation issues, and I couldn't comment on what they would be in from Canada to someone in Australia. There are taxation treaties involved, but I know there are also limitations to that. So you could wind up paying tax twice, although seek your own advice on that one. But I think the biggest issue for me is that it disappears from any sort of scrutiny in Australia. You're not going to see articles about it in the press, the financial press. And so, it's a situation where you'll be tracking the share price and suddenly see a big movement up or down. And about a month later, you'll get an email from the company saying this or that's happening. So you just can't keep track of what's happening with the company, really. So I'd be selling on market now and then taking my cash and putting it somewhere else. There's nothing wrong with holding overseas stocks, but I just find it's just that extra difficulty and complexity with tracking it and dealing with currency and tax issues.
A level of complexity that you don't need in your life.
Correct. Yeah. Especially with a one-off scenario. I mean, if you had a portfolio of overseas stocks, you'd focus on those issues and optimize them for yourself. But just having one in the portfolio, it can be a distraction.
Yeah. There you go, Sue. Hope that helps. Good luck with that, and congratulations on holding C6C at the right time. And as we've said just recently, I can't remember which share it was, but something else that we had that's getting taken over. One of the perks of the QAV system is that if we determine that a stock is undervalued, we're probably not the only people who are going to determine that. And these sorts of acquisitions tend to happen, in my experience over the last few years, a few times a year. These sorts of things seem to happen to QAV stocks, right?
Absolutely. And we have a bit of a benefit because it's probably taken these companies 6 months or so to nut out a deal and come to an agreement. They move much slower than we do, so we can get in and wait for the takeovers to happen, which is our advantage.
Toby asks, when looking at a Josephine status, I've started looking not just at the first of the month, but the previous 4 to 4.3 weeks. For example, BHP is 46.45 today and was 43.39 on the 13th of March and was $47.23 on the 31st of March. And from what I can see, be interested in any comments. Thanks. And I didn't understand. So I went back to him and said, 4.3 weeks. Is that 4 weeks and 2.333 days? Why? And he said, I'm looking at the trailing month of a share price on any particular day as opposed to a Josephine, which could range from one day to the full month. 4.35 weeks is the average per month. And so that made more sense. I still honestly don't understand the question, Tony. Do you understand what Toby's asking?
I do, and it's not a bad idea. And so, Toby, tell us how you go with your use of the trailing month. So we use the end of the month as our anchor price, and we see whether the current price is above or below that. And if it's below that, we call the Josephine. And that has limitations at the start of the month because it's only a couple of days worth of data. So if the share price is variable, it can fall into a Josephine at the start of the month, and then as the month progresses, it comes back above it. And so the Josephine calculation that we use is probably more relevant from the midway through the month, or at least by the second week onwards for the rest of the month. However, it's just, I guess, a bit simpler because we use monthly graphs, so we don't have to code anything special to look at the last 4 weeks worth of data for a company. So I guess it swings and roundabouts. Toby, I think, is probably more correct. We're looking for a trend. We don't want to buy something if the short-term trend is against us, and he's probably more accurate to look at the last 4 weeks worth of data and see whether the trend's established downwards over that. I'm just doing something which is quick and dirty and easy by looking at the graphs we normally use, take the closing price from the last month, and then see how we're tracking versus that. So yeah, Toby, good idea. Just let us know if you find it more useful than doing it the way we do. And I guess also too, if there's how much work's involved in getting a trailing 4-month price to compare. Sorry,
Right.
4-week price, I should say.
Right. So to summarize all that, are you saying that what Toby's doing is looking to see if the current price is less than the highest price in the last 4.3 weeks?
No, well, the way I read the question was he's just going back 4.3 weeks and seeing what the price was on that day. So
Oh,
it's
on
the
that day.
18th of
Right.
April now, go back to 18th of March. And
Right.
is the price lower than that?
Right.
Yeah,
Okay.
that's how I
Yeah,
read
well,
it.
let us know how that goes for you, Toby. And I got the title of this week's episode out of that too. Quick and dirty and easy. That's
Yeah.
changed
Well, you can't
QAV.
go and play 12 rounds of golf if you have to sit and code. Or
QDE. That's what we're going to
trailing
call
stock prices. Yeah.
it. Danny, he's also talking about C6C, and he asked exactly the same question. Okay,
Fantastic.
don't worry. Sorry,
Yeah.
Danny. Already answered that one. Jordan, I think Tony kind of mentioned it on the last show, but I just wanted to clarify if Tony's bought multiple positions on the same stock, does he track each Rule 1 line or does he take an average of all the positions bought and use that as the Rule 1 for all of them? I think it's the latter, right?
It is the latter, but I did think about Jordan's question because yeah, I guess it's like, again, it's a quick and dirty, right? If you've got parcels and they're roughly the same size and bought at different prices, then the average is reasonable to use because if you're selling at a loss for the second parcel, but you're making money on the first parcel, it comes out in the wash. But Jordan's right. If I bought $1 million for the first one and 100,000 of the second one, you really got to weight the average for that parcel and get a weighted average for your rule ones, because you could lose a lot of the second parcel because the average for the first parcel might be a lot lower. I guess what I'm saying is that if I bought BHP for $20 and then bought it later on for $30, if the parcels were both about the same size, and I'm happy using a $25 average. But if I bought a lot at 20 and not much at 30, then it doesn't make sense just to take the mathematical average or the arithmetic average. It should be a weighted average. But I tend not to do that because generally the parcels are around the same size.
Yeah, that's what I was going to say. Your parcels are usually, you're aiming for similar size parcels, right?
Yeah, yeah,
Yeah.
yeah. But like I can
Okay.
see a case where you do it separately. Like if I had bought PHP this year and then in 3 years' time, and the parcel I bought this year has grown quite large, then I might treat them as separate. But generally, what tends to happen with me is that I bought Macquarie Bank last month and I bought it again this month, and the parcels are about the same size, so it just makes it easier to lump them together rather than having a portfolio of 15 stocks to track on. I don't want to have a portfolio of 30 or 40 stocks to track because I happen to buy them in different parcels.
All right. Hope that helps, Jordan. Caroline asks a question about what the thinking is in this type of scenario, whether to buy or not those companies that are still on the current buyer list, such as KAR, LAU, DUR, for example, that have had an amazing share price run as per the 5-year chart, with the thought that can this uptrend possibly continue? I suspect it's a case of buy it anyway if it's the next stock on my buy list, regardless of this, and ignore the voice in my head that says, don't buy. This amazing run can't possibly continue. Common question. We get it often, and I get it. I mean, I understand. I have exactly the same instinct when I look at these charts. I think, oh, wow, that's gone up so far. It can't possibly keep going. And then I look at LAU, which has gone up 200% in the dummy portfolio since we bought it in June of 2022. It's gone up 199% since June of last year. It's had a crazy run. But like if it, and it's been on the buy list, I think nearly all of that time. If if it had already
Yeah,
gone up 100% since June and you looked at it and you said, well, I'm not going to buy it. It's already gone up 100%. It's gone up another 100% since
correct.
then.
Yeah,
You would have
good
lost
point.
all of that.
Yeah, good point. I mean, it's going up for a reason, and it the unless the share price is completely divorced from reality, I suspect when the next numbers fall, it'll still be on the buy list. So, no, I'm quite happy to buy stocks that have gone up, even astronomically, because they can keep going up, and generally it represents a phase change in the business. So, if new numbers come out and it's not on the buy list, you'd hold on until the 3-point trend lines come into effect, and that's the issue I think that people are alluding to, is that it's now, like, if you look at LAU or any of those stocks which were mentioned, they're a long way from their sell lines. However, Rule 1 will take care of that problem. If you buy it now and it drops down 10%, then it's time to sell.
Yeah.
For that very reason, that they will have a pullback at some time, I guess. But the question is when and by how much.
Yeah. But again, I understand the instinct because, and you've often said this on the show, no tree grows to the sky.
Mhm.
And so we look at these things that have gone up, and look, the converse example is I've bought lots of stocks that have had a good run, and I get them I buy into it at the end of their run, and they turn around,
Right.
they go back.
Yep.
So there's always going to be some winners and some losses, and it's easy to fixate on the ones that don't work out, and damn, I knew that was too good to be true, kind of thing. But your experience over 25, 30 years, you believe, is that it works out more often than it doesn't work out if you buy into these
Correct.
companies, regardless of whether. Because if they're on the buy list, it means that the system is telling us that they're undervalued. Doesn't matter how
Yeah.
good a run they've had; they're undervalued right now,
Yeah. Correct.
and a
And
quality company.
yeah, and even if they just return to fair value, that's still going to provide plenty of upside for people.
Mm, mm.
So yeah, definitely. Yeah, and I'm happy buying in those circumstances. I mean, we've talked about Fortescue Metals Group for a long time, but that stock tripled in value. And if we had have said along the way, "Oh, look at the graph, it's going up, it's going up, it's been going up. Why should I buy it?" We would have missed out on all those, those final doublings in the share price.
Mm. Well,
Mm.
it tripled in value after we bought it. I think even
Mm.
before that, it had been going up for
Correct.
years, by
Yeah.
the time we got in. Um, yeah, I mean, I think the thing for everyone to keep in mind is the buy list today is taking a snapshot today of what the company looks like based on its current financials and its recent history in terms of its PE and its equity and that kind of stuff. So it's giving us a snapshot of the quality and the value of a stock at this point in time, and it doesn't take into account, kind of does with the PE, I guess, but it really doesn't look at where the share price has gone in the last 6,
Oh,
12, 24 months,
correct.
apart
So
from sentiment, making sure that it has
yeah,
positive sentiment. And we do give it an extra point if it's got the lowest PE,
yeah.
which factors in the price, obviously. But really, it's a snapshot of today
Well, it's really a snapshot of the last numbers, which could be up to 5 or 6 months old. So,
and
uh,
today's price.
and today's price. That's right. So, yeah, I mean, it's possible that the new numbers come out. When will they come out? In August, and we find out that the price is fair value when the new numbers come out, but it was great value on the old numbers. But even buying it at fair value is still attractive. There's still plenty of upside in it. I can't think of any case where this situation has happened and the numbers come out and they're terrible and the share price crashes. I mean, nothing springs to mind because generally what's happening is the numbers were great last time they were reported, and something's happened, and the analysts are factoring in an even better set of numbers next time, which is why the share price is up.
Yeah, yeah, because it's a well-run business and
Yeah,
it's in a good space.
yeah, correct.
Hope that helps, Caroline. Basically, I guess where I've been at for a long time, is I just trust the system. Like, don't overthink it, Caroline. If it tells you to
Yeah.
buy if it tells you the stock's a buy, that's a buy. The more the more you try and outthink it, I think the more trouble you get into. It's just,
Well, I think
easy.
outthinking things is fun, but just apply the system in real life and have a pen and paper beside your desk. And when you have an idea like this, like I don't want to buy something that's doubled in price, just track it and see whether you were right or not, and then
Yeah.
fold it back into the system once you've got some proof one way or the other. Don't
Yeah.
trust your emotions. The feel ain't real. It's a saying in golf. The feel ain't real.
How does that apply to golf?
Oh, well, like you'll stand there and say, "Oh, I felt like I was swinging in to out or out to in," and your coach will go, "Nah, you're doing all this. Your hands are too fast and they're ahead of you, and you won't feel it because you think you're
Right.
doing something else." Yeah, so the feel ain't real.
I'm going to have to take that to Kung Fu. The feel ain't real. I'm not sure how I'm going to use it. James has got a question about LAU. So they issued something, application for quotation of Plus Securities. Date of announcement, Friday the 14th of April, 2023. The Plus securities to be quoted are Plus securities issued under a Plus dividend or distribution plan. And then it says security description, ordinary fully paid, number of Plus securities to be quoted, 629,603, issue date the 14th of April 2023, which was 4 days ago. What are Plus securities being issued, Tony?
Well, in this particular case, and James provided a copy of the ASX announcement, there are new shares being issued by the company to fund a dividend reinvestment plan. So in this particular case, people who are receiving a dividend can elect to go into the plan and receive their dividend rather than as a cash payment as new shares in the company. And typically it's at a discount, a slight discount to the share price. Usually it's about 2-3%. And if you like the company, it's a good way of buying things a little bit cheaper. But the company has to pay for it. So instead of issuing cash, they're issuing new shares at the same value as those dividends that were part of the DRP. So shareholders of the company are being slightly diluted every half by DRP shares, but the flip side is the company's saving the cash. So it's kind of swings and roundabouts with that.
Right.
So nothing to worry about, really.
No downside for investors. There's a bit of
No.
dilution, but
Slight dilution. If you think about, I mean, I don't know what the numbers are for LAU, but I would think a lot of people won't be in the DRP, and so it's not and dividend. What's the yield on LAU? I'm not sure what it is, but it wouldn't be, probably 3 or 4%, and then it's even if half the people are taking their dividends as shares, it's like a 1% dilution or so. In terms of the shareholding, but then again, the company saves the cash on paying out the dividend, which gets put onto the balance sheet. So it's same really.
They can do something with that cash.
Correct. Yeah.
I remember buying into LAU. Like, it's one of those stocks that I think we've bought and sold multiple times over the years.
Okay.
And it's never done very well. It's always sort of been a bit of a disappointment for me, LAU. And it's one of those things, when it comes back up and it's the next thing on the buy list, I'm like, not this again.
Hang on, I was didn't you just say 5 minutes ago it's up 200% since 2022?
Yeah, but what I'm saying is I think I've bought it before that multiple
Oh, okay.
times
Yeah,
over the
right.
years, right? I'll just bring it up in Navexa and see if I can see.
And that's another learning too, isn't it? You can buy a great company at a good price, and it can take a couple of years before the market wakes up to that, or something happens to incite the share price to rise.
Yeah. Let's see if I can go back in time with this. No. No, according to Navexa, this is the only time I bought it for the dummy portfolio. It must have been in my own portfolios. I bought it and sold it a couple of times. If you look back at the chart, back to a few years ago. I mean, it's had a great run, but from sort of 2019, let's say 2019 to 2022, it barely moved. Like 29 January 2019, it was at 36 cents. January 22 was at 39 cents. So it basically just went horizontal for a good 3 years. And
Mm.
I think over that period of time, I bought it and sold it a few times out of my portfolios. And of course, it's not in any of my personal portfolios now, God damn it. But then, so I think when I added it back to QA, I bought it for the DP. I was like, ugh, LAU, it never goes anywhere. It's gone from 38 cents. Well, when we bought it in June at 38 cents, and it's now $1.24. So,
Oh, yeah,
it's just, again, like, it's trust the system for me. Like,
yeah,
it tracked sideways for a few years and went nowhere, but the system was telling us the right thing. It was doing well. It was undervalued. It's just the market didn't wake up to it until this last sort of year, and then it's just gone bonkers. So,
mm,
if I'd held it in my portfolio all that time, I'd probably be very happy now. But
yeah,
that's the thing. Flip side is
yeah,
it could have gone down, and
yeah.
it's always to say I
And
would have been happy in retrospect, but it could have gone the other way. You don't know.
yeah, and we've got other ones to make up for it too.
Yeah. All right,
Mm.
last questions from Jordan again. I noticed PRU had to release a statement this morning regarding the conflict between the Sudanese military and a militia group. They are saying business as usual as the mine is 1,000 kilometers away. But when would Tony consider foreign conflict as a bad news sell? Good question, Jordan.
Yeah, it is a good question. I mean, bad news, red flags and bad news sell for me aren't. It's not these kinds of issues. The 3-point trend line and rule one will take care of these kinds of issues if they're bad enough. The red flag sells for me are around a kind of an early warning sign if the CFO resigns or an independent director resigns, and there's no good reason for it. It's not like they've been there for a long time and they're retiring. So yeah, bad news sell. I mean, I know nothing of what's happening in, where are these guys, in West Africa
Sudan.
somewhere?
Yeah.
Sudan, yeah. So I couldn't possibly make an informed decision about whether the coup's 1,000 kilometers away from the mine or whether it's happening across the street, and then what the impact of the incoming general is going to be on relationships with the mining company. So yeah, I wouldn't be selling based on this bad news, but I'll be watching it. And in fact, I had a look when I was prepping for the show, and PRU hasn't been that affected. It's down, I think, 2% today, but West African Resources, another company I own was down 7% last time it traded. So that may well be in closer to the Q activity than PRU, because I think they're both in West Africa. But I have no way of knowing what's going to happen. If West African Resources keeps falling, it'll probably hit my rule one sell at some stage if there's a problem. But yeah, I'll keep trusting the process to get me out rather than trying to understand what's happening many kilometers away. And I knew this was always a risk. I mean, these companies are cheap because of the sovereign risk issues that they face in Africa, which we've talked about before. If if you took these gold companies and put them in Australia, they'd be worth 2 or 3 times what they're trading for, because of this very factor that there's a risk involved in what they do.
Well, while you're over in the US, just pop into Langley, Tony, in Virginia, the CIA headquarters, because it's just a CIA proxy war going on over in Sudan, as always. So they'll probably be able to give you the lowdown on how it's going to
Oh,
play out.
right. Yeah. They'll just let me waltz in, will they, into Langley?
Yeah,
Yeah.
just tell them who you are.
They're probably
Sure
listening. Hello.
I'm
Hello.
sure they listen to every podcast I record. Trust me, they've they've got a file on me, and because of our relationship, they've probably got a file on you
Yeah.
too.
Yeah.
Well, that is the show for this week. Yeah, I don't think there's anything else. I don't know if you've got any after hours. You've been
No.
told me all
Apart
your
from,
after hours at the beginning of the
yeah.
show.
Apart from golfing and hanging out with the good old boys. Have a good day, y'all. Actually, it's really
Mm-hmm.
pleasant. I mean, that's one thing which has left an imprint on me, is just how nice everyone is in the South. You get on like you file onto a bus, and the bus driver makes sure he says hello, how are you to everyone that gets on the bus, and you have a good day. It's just it's
Southerns.
pleasant.
Yeah.
Yeah,
That's why I like working with Ray. He's very polite and he always apologizes every time he
right.
makes a mistake. He's a good Southern boy.
Yeah,
Um,
and that's nice.
yeah. So when do you leave Savannah?
Oh, tomorrow we're just overnighting here. We just dropped Jeff off at the airport, and I like Savannah, so I wanted to stop here, even though it's only about an hour from our last stop. Uh, and yeah, we went for a drive around all the old houses, which are lovely, the Victorian looking timber houses. A lot of history in Savannah. Like it's a Revolutionary War town. I think I was reading a plaque today about how the first US naval boat was launched from Savannah to attack the
Hmm.
British and took over a British frigate just off the coast. So
Wow.
full of history. Yeah, great place. And it's a student town too, so lots of pubs and restaurants and things, which have
What did
been
you have?
fun.
What did you have for dinner tonight? Anything Southern fancy?
Well, Ruddy had southern fried chicken and collard greens, so he
Mm.
wanted to try that. And when he
Hmm.
gets it, he goes, "This is just like KFC." And I said, "Well, what do you think KFC is? It's southern fried chicken."
Well, it's Kentucky Fried Chicken, but yes.
Oh, just yeah, a couple of suburbs, a couple of states over. Yeah.
Yeah, yeah. Just like KFC.
I don't know what he expected, but I had a steak. Steaks are lovely in the
Oh,
south.
right.
Yeah, very good. Yeah, well, good to see you. Good to talk to you again.
Yeah, you too. Um, Maybe do a show next week.
Yeah, no, next week should be fine. What's that going to be? Monday night? Yeah, I'll be in Toronto. I think Jenny and Alex will probably be jet lagged, so I doubt if we're doing much that night.
Right,
But like,
right.
yeah. The week after might be difficult because I'll be traveling back from Australia. I think I'll be on a plane on Monday night or Tuesday morning.
Right.
Uh, so you might just have to either delay a few days or miss a week.
Okay. We'll work
Yeah.
something out.
All right.
I can do a maybe a best of or something. All right. Well, thanks, man. Good to see you. Glad you're having a good time. Glad you're okay and escaped COVID.
Mm.
And yeah, I'll talk to you next week.
All right, mate. Take it easy.
Cheers. You
Bye,
too.
everyone.
Bye.